The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. Jenny here from the MFAA. Thank you for joining us for today's webinar presented by Etienne Rizzo, Director of Deposit Assure. During today's webinar, Etienne will discuss the ins and outs of deposit bonds and how they can deliver happiness to your clients. Before we begin, please remember that the views and opinions expressed in this webinar may not necessarily represent those of the MFAA. The MFAA is not responsible for the accuracy or reliability of information provided by external parties. The recipient should consider the necessity to obtain their own legal advice. Over to you, Etienne.
Good afternoon. Thank you, Jenny, and good afternoon, everyone in attendance. Thanks for taking some time out of your busy day to join us. So like Jenny mentioned, my name is Etienne Rizzo. I'm the Director of Deposit Assure. We started Deposit Assure about 5 years ago. And in this webinar, it's really about education, about focusing on deposit bonds, everything you need to know, and how and why they can deliver happiness to your clients. So let's get started. If there's any questions throughout the webinar, this is obviously live. So to make the most out of it, if you have any questions, please raise your virtual hand and I'll do my best to assist. My promise to you is to go through these 4 key areas. First and foremost, just a little bit of an understanding of deposit bonds. Some of you in the room will know what they are, but just for the benefit of those that perhaps are new to industry or perhaps have heard about them but have not really ventured into offering them to their clients, we'll just cover some of the theory and the groundwork. We'll then cover the reasons why brokers should be interested in deposit bonds, particularly in this current climate. We'll then go through very real and specific problems and scenarios that deposit bonds solve for, even give you some insight into some of the different states in terms of what scenarios are more popular for each state. We'll also go through how to obtain one for your clients and make that nice and quick. So that's the areas we're gonna cover. My personal goal is by the end of this session, if you've never referred a deposit bond before, you should be armed with everything you need to know to get one. And if I can achieve that, I will be really, really happy. So let's get through. So let's cut through the theory. What is a deposit bond? So the most important thing is it is a guarantee, and it's a guarantee that acts as a substitute for the cash deposit of up to 10% that's required when exchanging on a property at signing the contract. And it basically holds the buyer over until settlement. And so what happens is at settlement, the buyer pays the full purchase price, including the deposit. And that's really, really important. So there's no money exchanging hands, it's just a guarantee for that deposit. And the main benefit, the reasons many people use deposit bonds, is because it allows applicants to defer paying the deposit until settlement. And it's so that's basically the definition there. So if you think about it as a stopgap from exchange, allows the buyer to defer paying the deposit plus the full purchase price at settlement, which, you know, where the funds are coming from finance that you arrange as their broker. So deposit bonds can be arranged in a variety of scenarios. The most common is obviously private treaty, or perhaps even via auction, which we'll touch base on later. We can also work through different entities, purchasing entities, obviously most common being an individual. However, we can do deposit bonds for company trusts or SMSF purchases. Residential property or commercial real estate bonds can be issued for, and of course established homes or even off the plan. In terms of land, any land that is titled we can do a bond for, or even unregistered land. We do get many inquiries whether we can do deposit bonds for build contracts. We can only do build contracts if it's a combined house and land contract on a single contract, not if it is separated, just in case you're thinking about that. So that's the scenarios that they can be arranged for. Some things to quickly, raise with you. It's important to get approval by the vendor. At the end of the day, it's the vendor that can accept the use of a deposit bond. In Victoria, for all the brokers in the room from Victoria, we do have a similar product, the early release of deposit. which is the Section 27, where vendors can request the early release of a cash deposit for their own purchase. In many occasions, deposit bonds may not be approved or by the vendor. And unfortunately, in many cases, some real estate agents may prefer the Section 27 to be released to get, unfortunately, their commission paid out earlier. But in general, there's low awareness about deposit bonds, and this is what we're all about here, trying to raise awareness. We believe it's a powerful product, and it's a product that can really help buyers, especially in this current climate, to exchange on their property where they may not have been able to otherwise. So, some things to be aware of as well. It's not a silver bullet. You know, if people get a deposit bond, they're still liable for that deposit. If the contract does not proceed, if your clients used a cash deposit or used a cash deposit to exchange, they would still lose that cash deposit if they changed their mind or did not proceed with the contract. It's the same with a deposit bond. If they get a deposit bond, they exchange and they change their mind, we will pay the vendor within 24 to 48 hours the deposit amount on request. We will then ask the applicant to pay us back. So it is very important when we go through the application process with the clients and they sign the application. All this is very clear and concise, and most clients, and claims are rare, very rare indeed, but when they do happen, most clients are aware of their obligations that they do have to pay it back. So we'll get through the why. Look, I started this business 5 years ago. I've never been super passionate about deposit bonds myself. It's not something that excites me, but what excites me and what I've built a team around is about helping others. Helping others is what gets me out of bed in the morning, and I know a lot of brokers have a similar passion. That's why you're good at what you do. And so by helping others through issuing deposit bonds, we deliver happiness. And my team and I, we get so much joy when we call a client at the end when a deposit bond is released, and often it's the last piece of the puzzle that they need before the finance comes through from your loans that you guys help them with. But this is, I guess, the last hurdle to exchange on the property and I guess take a bit of a breather before settling on the property. So I love this part of my job. I love this part of what we do. And this is what excites me and hopefully excites you to also add it to your toolkit. As you can see, we do get feedback. It is a stressful time, and what we try and do is use the deposit bond as a great tool to help make it easier for your clients in the event that they can't come up with that cash deposit at exchange. So we deliver happiness to clients because we solve very real problems. Now, there are two types of problems: when they do not have immediate or ready access, or on the other side, convenient access, where some people may be able to get access to the cash, but it's not convenient, whether it's financial or whether it's a time inconvenience to their 10% cash deposit. So those are the two problems we solve for. It's nice and simple. And as brokers, what you guys do best, and the reason why I even use a broker, is you solve more and more of your clients' needs, you know, and that's why we come to you, and that leads to greater retention and loyalty. And what we're trying to do today is just add deposit bonds as one of those other solutions that can help your clients when they come up into any of those two buckets that I just spoke about, to try and help solve that problem. So let's look at some of the scenarios top level. So if we look at on the left there, people, most commonly, I would say 80% of the time, you're going to come across people who will not have ready access to that cash deposit. Now, the most common, as you can appreciate, is anyone who's buying and selling. Now, whether that's buying and selling simultaneously, or even perhaps, you know, buying now and intending to sell later, the key point is they don't have access to their cash until settlement, until the property that they are selling settles. And so they find themselves in a position where they're cash poor today. Okay, it's certainly a myth that deposit bonds are issued for people who are in low socioeconomic zones. That's certainly not the case. Often it's quite people who are quite rich in terms of equity. They just don't have that access to that equity today. So buying and selling is by far the most common. I'll switch you over to first home buyers. First home buyers across the eastern seaboard is by far the most common scenario for us at the moment. And I think obviously for obvious reasons, a cooling market, we're starting to see more first home buyers come in. And so a deposit bond can help these guys superbly because first home buyers are often short on savings. They're often leveraging guarantor loans that you guys are helping them with. And it's quite easy to ask mum and dad to help with a guarantor loan to leverage their equity, but it's another hurdle completely to also ask mum and dad to supplement their cash for the deposit they need for exchange. So a deposit bond can be issued on the backing of the formal approval that is supplied for the guarantor loan. And we are going to touch on this later, but just it's nice and simple, and that's how we can assist first home buyers with deposit bonds. Downsizers and retirees, that's the second most common scenario across the Eastern Seaboard, particularly where they're asset rich but cash poor. And a lot of them are looking to buy now, but won't see their money till settlement. And I've just got a question here, I'll have a look. Thank you, Shane. If a client just needs 3 months of a 12-month requirement, what happens then? Cash to deposit assure or cash to vendor? Okay, we're going to touch on that, Shane. If it's a 12-month bond and it does settle earlier than 6 months from the expiry, there is a refund. If you could just hold that, I will touch on that. We do give a refund back to the client, but thank you for your question. All right, so let's cross over to the other side. For the people that could get access to cash, but it may be more convenient to use a deposit bond instead, we particularly see this with property investors where cash is working harder elsewhere, perhaps in a term deposit, perhaps in an offset, or perhaps even with the current climate, the banking have tightened their regulations, their assessments are taking a little bit longer. In the past, perhaps they may draw down on equity, and now perhaps it's quicker to get a deposit bond. In most cases, can be issued within a business hour. So that's certainly an improvement on deposit bonds at the moment. In terms of off the plan, you know, nobody wants to lose access to their cash for such a long period of time. Sometimes, you know, I think the biggest off the plan we've done settled in 78 months, which is so far away. But commonly, they're 36 months or 48 months away, and that's a long time to part with your hard-earned cash. Whereas with a deposit bond, you can pay the one-off fee, keep your cash where it is, and if it makes sense, it's a great solution for your clients. So that's an overview of the spectrum. We are going to delve deeper into each of these scenarios so that you can actually see the assessment process and how it works. And it's important to note that I'm not here to try and convince your buyers or your applicants who have cash to use a deposit bond. It's certainly not what I'm here for. What I'm trying to arm you guys with is the knowledge that when a client comes to you with a problem, where they don't have access to the cash, or perhaps it's more convenient to use a bond, that you can offer them this solution to help solve their problem and add more value to your business. So now I'm going to quickly change over. I'm going to give you a minute testimonial from Warren Freeman, who's a top broker in Victoria at Cos I'm Free, just to hear his words about how he uses deposit bonds. Hopefully it will help. Just give me a moment. Just switch this over. Okay. All right, so I'll just quickly get us back to the screen. All right, so it's nice to hear from your peers about, the key points there: adding value to your business, solving more problems, giving yourselves a competitive advantage, even across the banks who don't even issue deposit bonds anymore. So it's a great product along with everything else that you guys have in your portfolio. So let's keep going through. So let's look at the qualifications. How do we qualify your clients? Now, it's important that you just know enough to be able to say, yes, I think my client's going to pass. I think my client has what they have, so that we don't waste their time and you've got that confidence to recommend the product. And importantly, to qualify, applicants must demonstrate they have the financial capacity to purchase. It's as simple as that. And the most common way that brokers can demonstrate that to us is by providing us with unconditional proof of funds to complete the purchase. And the most common is obviously having a finance approval. If the finance approval that is supplied is at minimum conditionally approved subject to evaluation, we can proceed with that application under this assessment process. Sometimes we get pre-approvals or AIPs where there's still too many things to satisfy, and we either have to wait till those are satisfied or we move into another type of assessment, which I'll touch on shortly. The other way is like retirees, if we've got unconditional proof of funds from a sale contract with enough money being available from that sale contract to purchase the new one outright, we can also assess it under this scenario there. Sometimes even if there's a court order, it's gone through the family court orders and we can see there's enough money being made available to purchase outright, we can also assess it under that assessment there. But in general, the most common is when you have unconditional proof of funds. The other side of the coin, if settlement is greater than 6 months, or perhaps there are still too many conditions to satisfy on the finance approval, we do an income and home equity assessment. And that is, we assess the serviceability of the applicants, we assess the equity in existing property or properties to make sure that they have the financial capacity to settle on that purchase. I'll just quickly look at a question. If the bank changes, thank you, Michael, if the bank changes value of property, is the deposit bond fixed or can it move with banking requirements, i.e. long-term settlements for apartments? Never happened, that scenario, Michael, in my time, but the deposit bond is fixed. It's fixed to whatever was signed on the contract. So it's got nothing to do, I guess, if the banking changes their requirements, it's got nothing to do with that. It's whatever they've signed for an exchange on that contract. So generally, once the bond is released, it's released based on the contract that's supplied, and it doesn't really change at all unless the term changes. Let's say they want to increase the term of the bond. That's the only time we would ever change the deposit bond after it's released to make it extend for a little bit longer. Hopefully that answered your question, Michael. All right, so those are the two ways we can qualify your clients. Most of the time it's in the unconditional proof of funds. And what we'll do now is we'll go through some very real scenarios. So scenarios where I'm 100% sure you've got people in your portfolio right now who probably sit within these buckets. Josh and Sam, the most common scenario, first home buyers looking to buy their first home at 550K, and it's an established home that's due to settle within 6 months. So Josh and Sam, these guys were leveraging a family guarantee loan, and I remember they don't have enough savings for the deposit, borrowing 100% plus costs with a family guarantor loan. Their broker suggested a deposit bond, and effectively I believe it was a heritage approval with a guarantor approval, and it was formally approved. So we could pass it on that basis. And the only documents we required from the broker was the approval letter, the contract of sale for the purchase, photo ID of the applicants, and the signed deposit bond application. It's as simple as that. So their financial capacity was proven by the unconditional finance that was supplied. Now the fee is nice and simple, and it's cost effective. A deposit bond for 55,000, the fee was 1.3%, which is a one-off fee, which equates to $715. Now it's quite cheap because it's low risk. Finance approval was supplied. The bank or the lender has done their diligence on this file. We can demonstrate without any doubt that the client does have the ability to settle on this property. And it's important to note, because we don't approve every single bond. We must demonstrate that there's no settlement risk at all, and obviously in this case there isn't, and the deposit bond was released. And we call this application our express application, and it's the most common application where there's an unconditional proof of funds that's been demonstrated to proceed with the bond. So that scenario here is very, very common at the moment. I think it's a #1 scenario across the Eastern Seaboard. Many first home buyers don't even know about this, that it's possible. They may be trying hard to save up that extra bit of money to be able to exchange. So it's a good opportunity to market to your audience, to let them know that this exists in this cooling market. Retirees, Megan and John, again, I think it's our second in Q1 and Q2, our second most popular in the Eastern Seaboard for downsizers. Buying a new home for 800K, looking to downsize. They have their current home under contract. So they've already got an offer, it's under contract for 1.2, and they are unencumbered, which is quite common. And their problem obviously is they have no access to their cash until settlement of their existing property. So basically, now this was referred by a broker, even though the broker wasn't really doing a loan for them or the finance, they still helped solve the problem, which is why so many people still trust their broker with these sort of things. And the deposit bond was issued after verifying that the property under contract is unconditional. So my team called the solicitor, they checked that the property being sold is under contract and unconditional, there's no blockages, and we confirm that settlement is due to be either prior to or simultaneously with the new property. And that really satisfies our requirement to demonstrate they have the financial capacity. The documents required, nice and simple, the two contracts. Contract for the purchase, which is obviously unsigned, but a contract for the sale property, which needs to be signed, photo ID, and the signed deposit bond application. Again, because this fits into our unconditional proof of funds, our express, the fee is 1.3%. So that's quite a common scenario. I'll quickly look at a question here. Vince, if you need to ask a question that didn't come through, please try again if you don't mind. But nothing's come through there, thank you. All right, so that retirees, like I said, no finance involved, but a broker has solved the problem where these retirees didn't even know this product existed, and they were able to exchange quickly and efficiently until their property settles in the coming weeks. So that was nice and easy. Michael and Belinda, upsizing, also quite a common scenario. This one, I wanted to bring it in to show you how an auction bond works. So they were looking to enter an auction market. Quite common, particularly in Victoria, we see a lot of these. Looking to maximum bid of 960K. They had their current property on the market for 700 with a mortgage owing of 300K. Okay, so entering an auction market, property still on the market, no buyer yet, as yet. So all their cash obviously locked away in the equity of their home, which they can't realize as yet. And this one, I remember the applicants held a pre-approval. So they had a pre-approval that was subject to the sale of their property. So with their current property on the market, the only thing we could do here is assess on home equity and income. If I take you back a few slides, I mentioned that we can only assess under our express conditions for unconditional proof if we can see a finance approval that's at minimum subject to valuation only. So because this had a condition about the sale of their property and it wasn't yet under contract, we couldn't assess it under that scenario. So we switch over to the income and home equity assessment, which is nice and easy. And all we did is confirm that based on their level of income, they can service, they've got the financial capacity to service that loan. And we also look at the net worth coverage. What net worth coverage does the client need to be able to demonstrate their capacity to settle on this property? And in this regard, because it was within 6 months, we need to see 2 times the bond amount in equity. So we need to see 192K in net worth, and they actually proved to have about 400K. So they satisfied that requirement. We issued a bond for up to 10% of the maximum bid. And the documents we needed, there are a little bit more documents because of the different assessment, photo ID and proof of income. So proof of income could be the last 2 payslips, or if they're self-employed, their most recent tax return. We also need to see liability statements. You know, generally just the mortgage statement is generally all we need, just to show their main liability, including rates notice to just show property ownership, and the signed deposit bond application. The fee for any deposit bond within 6 months where we're assessing on income and equity is 1.8%. So it is a little bit more expensive, and the reason for that is there's more assessment, there's more underwriting involved, and you know, generally there is slightly more risk than the other scenario for us. And we call this our standard deposit bond application. I'll quickly take a question. Yeah, thanks Vincent. I just signed up yesterday, have one for a long-term product. No worries. Well, Vince, I'm going to show you a scenario for long-term, how they work. So hopefully that helps you indeed. Thanks, Vincent. So that's how we assess on income and home equity. An auction bond, many of you may not have heard of them before. They're really an effective tool that your buyers can take to auction. Effectively, it's an open check. As you can see here for Michael and Belinda, they are able to walk into auction with a deposit bond of up to 10% of their maximum bid price. And if they're successful on the day, they can complete the vendor's name on the day in writing. They can complete the property address and the final purchase price. And effectively, they're ready to go with that 10%. Now, it's already pre-approved by QBE. It's already been assessed. And the wonderful thing about auction bonds is that if they're not successful, they can just use it for their next one until they are. And if for any reason they negotiate via private treaty, you know, post-auction perhaps, they can still use it. So it doesn't cost any more. It's just a handy tool for buyers who are probably selling at the same time and just want to have that 10% available. The cost for an auction bond is the same whether it's 3 months or 6 months. So a lot of people take them for 6 months just for additional value. So it is a fantastic tool. There's another question here. What if they go a little higher on the auction? Very good question, Vincent. The auction bond is set to up to their maximum bid price. So if it goes higher, they can always supplement with cash on the day. If it goes lower, effectively it's up to that amount. So nothing changes. It still satisfies the vendor's requirements. To this date, I haven't had many that go over, but like I said, they can supplement with cash on top of it, or else they can ask us to reissue a new bond at a higher amount, which they can do as well. Just depends on how much, I guess, it went over. That's the other option. So that's how an auction bond works. Again, not many of your clients will know about them. They're a useful tool. We're about to release a video about how auction bonds work as well, which is part of some marketing that I'll share with you later, which you may find beneficial. All right, so Simon and Joanne, these guys are looking to sell the unit, which was under contract, which is worth 550K, with a mortgage of 250K on it. They found a property in Druin, Victoria, nice part of the world, for 500K, much faster than they expected. So the problem here, their money was tied up in the equity of their Cranbourne home, and they did not have access to that cash today. So the broker here was organising a substitution or a porting mortgage from their existing lender. And this is quite common. We see a lot of deposit bonds issued with the porting of mortgages as well, for obvious reasons. And the broker suggested a quick solution would be a deposit bond to solve that problem of the first deposit that's required. So what we do here is we demonstrate that the client has the financial capacity. We released it on the basis of our express application conditions, where we could prove that the client had the ability to settle on the property. And what we got was an approval from the bank, either by email or through a letter, that the substitution application was approved. Now that made it nice and easy. Now in some states, the banks or the lenders will not give you an approval of a substitution. They would rather see the bond first. In those scenarios, we can do a bit of an assessment ourselves on the LVR if it can't be provided. If the new LVR is less than or equal to the original LVR on the existing bond, an approval can be provided. So in this regard, we require photo ID, the contract for the purchase and the sale, proof of current mortgage balance, just to see how much is being ported, a fully signed discharge authority, as well as, if possible, the security substitution approval. The fee here is the same as our express conditions, 1.3%. So a really common scenario where you guys are helping with substitution of mortgages, a deposit bond can certainly assist. Let's have a look at a question here. From Mike. Should auction bond be cleared with auctioneer? Mike, that is a brilliant question. Absolutely. We always say with every bond, just make sure you clear it with the auctioneer. Particularly make mention, if you're using our product, it's a QBE-backed bond, which is the only bond covered by a local underwriter in Australia. And many of the times, vendors want to see that assurance that it's a local product. If you do get resistance, you can talk to myself or my team and they can help. A lot of the time it's down to education if they say no, or perhaps if it's in Victoria, maybe they're already underway with the Section 27. But yeah, great question, Mike. Another question from Shane Andrews. How long does it take to reissue an auction bond? Shane, it's an auction bond. Generally, all bonds, once they're assessed, it's an hour process for assessment and half an hour to release. So it's no difference with an auction bond. It's probably quicker because it's already being reassessed, and perhaps it needs to be reissued for an extra 3 months. It's probably even quicker because we've already done that initial assessment, Shane. So it's a quick process. David Flanagan has got a question here. Has anyone else lost sound? David, okay, your sound is back. All right, hopefully sound is back on. Great. Let's keep going. All right, so off the plan, for one of the questions in the room was about long term. Certainly off the plan has slowed down in the last, I would say, year and a half. However, it's starting to come back now, thanks to good news in the political climate. Nancy and Peter, property investors. We're seeing a lot of people buying off the plan where they currently own property that have some equity that's grown. These guys had an owner-occupied property worth 1.2 million with a mortgage of 500K, and we're looking to invest. So these guys could have got access to the cash. They did have an offset account. However, they did not want to lose the benefits of having their cash deposit in out of their offset for such a long time. And it made financial sense for these guys to use a deposit bond. Obviously, every case is different, and as brokers, you guys will help them make that decision about what works best for them. So with and off the plan, it's important to note that a deposit bond has to be issued to the sunset date. It can't expire earlier than the sunset date. In this particular situation, it was a 36-month sunset date. So we instantly, as soon as the term of the bond is over 6 months, it instantly becomes an assessment on home equity and income. And so we look at a deposit bond for 56K. We need to see net worth coverage of 4 times the bond amount. Now, I'm going to show you a requirement sheet in a moment. It's in your handouts that actually shows you the different net worth coverage calculations that we need to demonstrate to be able to satisfy our insurer, QBE, that your clients will have the financial capacity to settle. So in this case, he needed to show, or they needed to show 224K in actual net worth, and they had 700. So we certainly satisfied that. In terms of the documents, very similar to what we touched on before, the proof of income, liability statements and rates notice, and the signed application. Now the fee, you will notice, jumps up. It's not a one-off or a percentage fee. There's a fee calculator. It's a sliding scale. The bigger the bond, the longer the term, the more expensive it is, because there's obviously more risk for us and the insurer. And so for this particular bond, the one-off fee was $5,460 for a 36-month bond. Okay. Now, one of the questions we had earlier was about a refund. So in this case, a bond is set to 36 months, but what happens if settlement happens earlier, which is quite common? Well, we're pleased to announce that we've got the strongest refund policy in the market, in the sense of we give a full refund if it expires earlier than 6 months from the expiry date of the bond. So in this example, settlement happened and was proven at 27 months. Therefore, we gave a full refund of the premium, the difference in premium between 36 months and 27 months, which was $997, which equates the net cost of this bond for the applicants to be $4,463. So when you guys are sitting there with your clients and they're weighing up using a cash deposit or a deposit bond, you know, these things can come into account. You know, when is it likely to settle? Will you get some money back? These are things that can certainly help. And it's important to note that a refund can only be given at the time settlement is proven, provided it does occur earlier than 6 months from the expiry date, and the maximum refund applicable is 18 months. But it's certainly a good news story for deposit bonds. And to give you some insight, we brought this policy in because we were losing a lot of business to bank guarantees, which is a similar product, where the risk and the payment stops the moment the bank guarantee expires. So this is why we've built this in. I'll just jump over to a question which has just come through. Okay. Justin Wang, thank you. Has deposit bond interest been reduced after the last 2 cash rate reductions? In fact, quite the contrary, Justine. We've seen a significant increase in inquiries after the last 2 cash rate reductions. And I just think it's down to buyers feeling more optimistic in terms of getting into the market, getting into the property market, particularly first home buyers, like I mentioned before. And generally there seems to be more of an appetite. You know, granted, you know, settlements are lower for us than last year. So, you know, the times are not fantastic for us if people aren't buying and selling. You know, we do struggle, but certainly after those last 2 cash rate reductions, we have seen an increase in bonds released and inquiries. So hopefully that helps, Justine. All right, so let's have a look here. So our clients, just quickly, some of the things they tell us, you know, this is directly from their mouth. We ask them why they use the bond. And you can just see the language they're using. Equity was locked up, which we plan to sell. Because we hadn't sold yet, we didn't have the cash ready for a deposit. Charmaine Way and her husband here, they were upsizing. They were buying and selling at the same time, looking to upsize. They just did not have the ability to fund the 10% cash. These guys used an auction bond. It was frustrating, as we knew we would be good for the cash once we settled on our property. And I think the key point here is there is frustration. We hear it from clients. Oh, the bank told us about a bond, or a broker told us about a bond, and I wish we knew about it before. So it's certainly a product that many of your clients may not have heard about before. These guys, Super, couldn't get money out of Super. Everything was tied up. Never heard of deposit bonds before, but it was the perfect solution for them. These guys are an example of financial convenience. He did the maths, worked out that it would save them $5,000 on interest by using a deposit bond, which just made sense for these guys. So every case is different, and you guys are in the best place to ascertain that with your clients. In your handouts, on the right-hand side there, you'll have this portfolio and requirement sheet. This has just got a bit of a summary of everything we've spoken about so far, and I just draw your attention to the net worth coverage down the bottom. So where we're assessing on income and equity, you can just see the calculation that we need to see. So you guys very quickly can make an assessment whether a deposit bond satisfies that requirement, which then gives you the confidence to submit the deal. Now that's only if we're doing income and equity assessment. Like I said before, if we're issuing it on our express conditions where there's unconditional proof of funds, we don't need to worry about net worth coverage because the financial capacity is demonstrated from the finance approval. How to obtain one? So nice and quickly. So as you are talking to your clients, the first question is, which bucket is it going to? If you've got unconditional proof of funds to complete, and settlement is within 6 months, which is the most common, there are two ways. You can refer to Deposit Assure's concierge team, or you can complete the express application online. Just depends on you and which one you would prefer. I'll go through both of those. If you are doing an income and home equity assessment at the moment, you have to complete the standard application yourself. However, we're also looking to launch a concierge offering, which I'll touch on, but effectively, they're the decisions you have to make. I'll just quickly take a question before I go into more detail. Can't see the calculator, Shane. The calculator's on our website. Are you talking about the net worth coverage calculator, Shane? If you are, it's on the requirement sheet. There's a handout section, and maybe Jenny can send that across or provide some insight as to it if you can't see it, but it's certainly there, and if not, Jenny can reach out and I can send it to you, Shane, no problem. All right, so those are the different ways to apply. Most of the time, when you've got finance approval, brokers choose to refer to our concierge service. And we built the concierge service to basically disrupt the market, to try and make it easier for mortgage brokers, because when we started, clients were coming to us direct, saying, oh, my broker recommended I get a bond, but they're nowhere in sight. So what we're trying to do is give you the value. You guys know your clients need a deposit bond. You fill out a form. In the time it takes, 30 seconds, the time it takes to make a coffee, you've actually got a bond underway for your client, and you look good to your client, and that's the most important thing. So referring to the concierge, I'll just quickly, oops, my sound, here we go. Just quickly show you, you've got this portal. Now, depending on your aggregator, each of your aggregators have a portal as well, but I've just kept the generic one here. It does look like this. You can complete the express application yourself through here, or complete the standard, or you can refer to the concierge by clicking that button at the top. And there's a quick form which you can see here. You put in your name, your email, the applicant's name, their last name, the mobile, the email, and the purchase details, purchase price, bond amount, finance approval, and you upload the documents directly from that portal. That's all you have to do in the scenario where you've got unconditional proof of funds. Click that button, and effectively, what you can expect is within 15 minutes, you get an auto approval pending receipt of the signed application and payment of the deposit bond. And it's very important to note here that I am aware there are some auto delegation authority approvals out there where brokers can basically sign for their own bonds and issue their own bonds. But I like to point out that the risk for doing that is firmly on your shoulders. And for the sake of 15 minutes, what we like to say is we look at your documents, we check the credibility of the file, and the risk for that file is firmly on my team's shoulders, which gives you peace of mind. So as quick as that. And what happens after 1 hour or within 1 hour from receiving the concierge referral, my team are preparing the deposit bond application for you, because we don't want you filling out yet another form with similar information that you've already done for the finance. We do it all for you from the concierge request that you've submitted and the documents that you've provided. And it's sent to your clients to sign with DocuSign. Nice and simple, you'll all be familiar with DocuSign. And once the document is signed, happiness, ladies and gentlemen, is issued within 1 business hour. So it's a really quick process, nice and quick. And the bond is issued electronically to all parties, yourself, the purchaser solicitor, the real estate agent, if applicable, and everybody's kept in the loop. I'll quickly take a question. Shane, is the calculator on the fee calculator to work out the cost of a bond is on our website, but the net worth coverage calculation that I mentioned earlier, that's on the document that's available as a handout, which myself or Jenny will send to you pending this if you can't get access to it. Vincent Ferrito asked a very good question. What income do we get for each deal? It's a good question. There are slight variations per aggregator, but in general, the 20% of the premium is sent to yourself if it's a direct deal or through the aggregator. Okay, so that's 20% of the deposit bond premium is the commission, and it's paid on the 10th day of the following month, Vincent. Hopefully that answers your question. All right, so let's keep going. So happiness is dispatched, and the most important thing is your clients have the protection and the backing of the only Australian-based insurer for deposit bonds. Deposit bonds have taken a hit in the market in 2018 following the exit of a major provider, and we're trying to repair the damage of it by pushing the strength of QBE. As you can appreciate, QBE is a trusted name. Every deposit bond we release it is backed by QBE. QBE have a history of paying claims, which is important because at the end of the day, a deposit bond is only the promise of paying the vendor in the event there's a claim. That's all it is. The QBE are the security of paying that bond. Deposit bonds are not secured against cash or equity. It's the promise of the insurer. So history of paying claims is really important. QBE are APRA approved and regulated, which is also really important in our current market, and they're answerable to the Australian legal system. So when it comes to deposit bonds, rest assured you are getting the ultimate protection for your client. One more question. Thanks, Shane. I appreciate that. Thanks for that. Okay, so let's just get here. So marketing. For all of you brokers, you're always looking for good stuff to market. I can tell you that awareness amongst applicants is very, very low. The highest is in New South Wales, obviously. That's where we see the most savvy buyers who know all about deposit bonds. But having said that, there are still a lot of people who just don't know what they are. I think I did a survey in 2018 where about 65% of our direct applicants heard from their broker or conveyancer about deposit bonds and came to us direct. So it's a great opportunity to market this product. We've got free counter stands, as you can see there. These sort of sit in your office. They've got a flyer that just explain in very basic terms how deposit bonds work, which you can hand out. So you can contact your BDM, which I'll share with you shortly, and request one of these. They're free. We'll send it out to your office ASAP. We've also got heaps of videos. Videos that are not about Deposit Assure. I'm very big on education, really big on educating the market about the value of deposit bonds, and you can even add your own logo to the video and add it to your social media, to your LinkedIn. It's a great opportunity. So we're trying to release one every month. Sometimes it's bi-monthly. The one coming up next is about auction bonds, how they work, which is what we've touched on today. And by becoming accredited with us, you can basically get some of these videos for your own marketing. Yeah, Shane, so there are flyers and handouts. So if you can email your BDM, which I'll share with you shortly, we can certainly send you some counter stands as well as some of those videos for you. All right, so the most important thing, we're all about, I'm very passionate about good client outcomes, as I know you all are. We are in the best position to help you. No one is as focused on it. We've got hundreds of Google reviews, hundreds of Trustpilot reviews. And the most important thing, especially with what happened with the deposit bond space, it's all about making sure that your client is protected. And, you know, testament to that is we do run a Net Promoter Score survey, Net Promoter Score, and our current results in Q2 tell us that 96% of every client that has used or been issued a deposit bond in Q2 had a Net Promoter Score of 96%, which means they're apostles. That 96% of the people that referred to us are preaching our name in a good light, and obviously preaching your name in a good light for recommending Deposit Assure. So that's what gets me out of bed in the morning, ladies and gentlemen, and this is what I'm most proud of. That's what you can expect from us. We will hold your client's hand if required and make sure that it's the easiest possible journey to getting a deposit bond. Some quick questions. I'll just touch on the most common and then open up the floor or the virtual floor to some more questions. If a bond is not approved, will you refund? Absolutely. A full refund is provided if Deposit Assure does not approve. If a bond is issued, if it's returned unused within 30 days of issue, a full refund is given, less a $200 admin fee, just to cover postage and administration for releasing that bond. If a client is not successful at auction during a period, so let's say they get a bond for 3 months, we can issue another bond, another extension, and all it costs is the admin fee of $200 for that extension. Who should receive the bond? It's very important, with all respect to real estate agents. Don't send it to the real estate agent. It just gets filed away in the cupboard. Deposit bonds have to be sent to the purchaser's solicitor unless told otherwise. It's the purchaser's solicitor or conveyancer who then should facilitate exchange with the vendor side. That's the best way to do it. How do you get accredited? Very simple. Go to depositassure.com.au/register. I invite you to do that. Choose your aggregator, and the process is all very simple from there. It's e-signing the form, and once it's usually a 24 to 48 hour process to complete the accreditation, and you're ready to go. If anyone has any bonds at the moment, you can get them underway before the accreditation, and we can just work to match the deal with your accreditation once it goes through. All right, so depositassure.com.au/register, that'll get you involved with all the marketing as well. Some key contacts. For any bonds underway, you can always email bonds@depositassure.com.au or that phone number. Your BDMs are listed below. So if you want counter stands or flyers or to get some of these marketing videos, email your respective BDM. There's Margie Depp in Victoria, Tas, Queensland, WA, South Australia, Northern Territory, or Louise Mills in New South Wales and ACT. And my email and phone number's there. I'm always willing to chat. If you come up resistance with real estate agents or any other challenges, give me a call. Would love to chat to you, as well as hear from you. That's pretty much it for me. I do hope you found it valuable, and I'll open up the room for some questions. Okay, so Shane, you asked how you get accredited. I mentioned go to depositassure.com.au/register, and you can get accredited there. Thanks, Michael, for the feedback. I really appreciate it. Thanks, Mark Fitzpatrick. Appreciate your feedback. Thanks, Shane. Thanks, Lauren. Thanks, Vincent, and thanks for your questions. Lena, yes, Jenny is going to follow up with a copy of the presentation. Jenny will send you that, and you can look at that in your own time, no problem. Thanks, Fred, for the feedback. Thanks, Lynn. Thanks, Paul. Nice to see you, Paul. Nice to see some of our referrers online. Thanks, Adrian. Thanks, Michael. Thanks, Govinda. Thanks, Ken. Thanks, Simranjit. Thanks, Robert. Appreciate the feedback. Thanks, Lauren. Thanks, Adino. Okay, so Dacian, hope I'm saying the name correctly, has asked me, can we rebate the commission to the client for deposit bonds? We offer this, to be completely transparent, to conveyancers, because some conveyancers don't want to take commission. It's a little bit difficult depending on your aggregator, Dacian, because obviously we have agreements with aggregation with your aggregators. So I would have to say no. We can't really rebate the commission for you in this regard, but it's a nice gesture. Thanks, John. Yes, Peter, the presentation will be available. Jenny will email it to you following this webinar. Andrew, thanks for your feedback. Andrew said, I never knew these existed. I really appreciate the info, and that really makes me happy, Andrew. That's why we run these webinars with our partners like MFAA. It's about education that benefits everybody. So thanks for that. Thanks, Audrey, for accrediting with us. I appreciate that. Thanks, Enric. Appreciate accreditation as well. Cheers. Thanks, Lee. You're very welcome. Thanks very much. All right, I think that covers it all, guys. Thank you, Jenny, for hosting this, and thank you for everyone for attending. And hang on, we got one other question here. Sorry. Thanks, Shane. Lunch on me. I appreciate that. Yes, Malcolm. If you missed part of the presentation, Jenny's going to be sending you a new one. So don't stress; it'll come through. And if you have any questions on the content, please call me direct. No problem. It's the first time I've been offered lunch after a webinar. That's really good. Thanks, Shane. All right, guys, thank you very much for your time. I'll let you get back to your good days. And Jenny, I'll hand over to you.
All good. Thank you, everyone, for joining. I'll end the webinar now. So tomorrow, I will send you all a copy of the presentation as well as the webinar recording. Thank you for joining us today.
Thanks, Jenny. Bye.